Hi, I am Anna. I come from www.ntvforex.com. Risk assets push higher on vaccine hopes. Eyes on the Fed analysis. http ntvforex.com news ID 3DBD 50914 7:58:59 am. After two consecutive weeks of back-to-back declines, global stocks kicked off Monday with solid gains amid a surge in M&A activity and positive signs towards vaccine developments. Currency markets were little changed ahead of a busy week of monetary policy announcements, while oil and gold ticked slightly higher. The two big deals announced over the weekend were SoftBank's plan to sell chipmaker ARM to Nvidia for more than $40 billion and Gilead Sciences to acquire Immunomedics for a price tag of $21 billion. Meanwhile, on the vaccine front, AstraZeneca resumed its Phase 3 trial on COVID-19 after being suspended last week following a neurological illness developed in one participant, and Pfizer announced that its vaccine could be distributed before year-end if found safe and effective. Central banks will take center stage this week, with the Federal Reserve, Bank of England and Bank of Japan all due to announce policy decisions. Out of the three meetings, the Fed is likely to be the most watched following its historic shift towards average inflation targeting. The big question remains, how will the FOMC put this policy into action? From what we know now, the Fed is set up to keep interest rates near zero for a long time, possibly for several years. Given the new framework, any spike in inflation won't translate into immediate rate hikes, as the Fed wants to compensate for the lost years when they have failed to hit the target. The dot plot will be the key guide for investors and traders alike. If inflation projections remain at 2% or below for the foreseeable future, this will solidify market expectations for a low-rate environment for many years to come. That said, Jay Powell would still have to explain in more detail how the new framework will be translated into policy action. In June's economic projections, the Fed anticipated unemployment would be at 9.3% by year-end, but, in August, unemployment was well below that forecast at 8.4%. Many other economic data surprised to the upside during the June-August period, in a clear sign that most economists were overly pessimistic towards the strength of the recovery. However, there is still a considerable amount of uncertainty given the latest surge in COVID-19 cases worldwide and the US, especially as we get closer into the winter season. A second wave will undoubtedly put the recovery at risk in the final quarter of the year, and it will be interesting to see the Fed's view on that issue. As for the market sell-off over the past 2 weeks, the Fed isn't likely to show any signs of concern. In fact, policymakers should be satisfied with the pullback, as the risk of a bubble in several assets has been growing due to the Fed's extremely accommodative policies. Unless we see another 10–15% drop, do not expect the Fed to intervene. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me mt5.expert.advisors.